While gold sinks, our happy days here again. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your update for Thursday, the 19th of January. Can you believe it? It's almost January. What we're looking at right now is the S&P 500. As you can see quite clearly, our trade triangles, which we talk about every day, are plus 100, meaning it's a very strong trend. Now, we're looking for this market to go quite a bit higher. And what we're looking for is a move that may shock some people, but we're going to show you how we did it and how we measure it. But first of all, we had our signal come in on our trade triangles right here. That was the 10th of January at 1,292, right here. And you can see that was approximately 9 days ago. Okay, so 9 days ago we had the signal, and we've seen the market go high. Now, we could come back down and test the level, the 1,300 level again, but everything's possible. Here's what we're looking at right now. We're looking at two measurements. One is this measurement right here, and the other is this measurement from here to here. Now, this is approximately, if we just measure this down, that's approximately 200 points. Actually, 210 points to be precise. And if we put 210 points onto this low here, that takes us up to, well, guess what? 1370. 1370. That was the first one target. Now, we also switched the highs from here to here in the move from this level, 1160, up to 1280. That's 120 points. That would take us up to 1400. So I think that's basically the target zones we have for this market is between 1370 and 1400 on the S&P. Now, you can say to yourselves, well, gee, the country's in a recession, unemployment's so high. Well, sometimes it doesn't matter with the markets. They tend to, we still had that happening here, and the market moved up. We still had that happening in a number of markets, and they've moved up. We'll be talking about the bank stocks today, which were under a tremendous amount of pressure. Now, suddenly, they're looking a lot better than they did just a month or two ago, and we'll talk about that. But here we are on the S&P 500, looking for 1370 to 1400 on the upside. Our trade triangle is going to rule the day, of course, for along from 1292. We'll be using our weeklies as an exit point should we get a signal, but we have our monthly, weekly, and daily plus 100 score, very strong trend, in strong hands. It looks like it wants to go higher. So let's go to our next market. Next market we're going to be looking at, of course, is silver. And to do that, we simply go on the little triangle button here. Takes us to our next market, silver. And I'm going to scope this in just a little bit closer so we can get an idea of what we're looking at. And we want to look just at maybe a 3-month chart. And we're really skeptical about silver here because the reality is our monthly trade triangle is negative. Weekly and daily are green. Conflict 60. It's a trading range. So this is what we're looking at, a trading range right now. If we put our Donchian trade channels in, which is right here, you can see we're just out of it. The way this is setting up today, it looks as if this is going to be a high day and we'll see a pullback. What you want to really pay attention to, in my mind, is to look at the PSAR, parabolic stop and reverse, which is the little dot right here. We use the default settings. It comes in at 29.81 today, so we're about 60 points away. This is real-time prices on silver and gold and in Forex. So if the market gets down to 29.81, this will be a signal to get out. It's not acting that well, in my opinion, and there's no enthusiasm. If you look at the longer-term picture, it still looks a little bit more on the defensive. Maybe more work has to be done. But let's take a look at the gold, because we talked about this last night, and it's kind of interesting what's happening today in gold, because if you remember, we talked last night about a long-term trend line. I'll scope this out just a little bit further so we can see that trend line, and I'll take everything off the screen again, just make it simple as possible so we can all get the picture here. And that is, we drew a trend line last night from the highs here. There's on a MarketClub TV show we did last night. And you just draw this down here. And you see how this just sort of intersects perfectly. And that's what's stopping the market. I would not be surprised to see this market come under a little more on the defensive, especially if the equity markets are going to get strong, and maybe just wallow around here, maybe even go lower, but certainly I think sideways until it has enough momentum to carry the day and move over this trend line. Can it do that? Well, not right now, because we have our monthly trade triangle that's negative. The weekly and the daily are positive, indicating a score of 60, which is basically not a positive score. That's a trading range, and that's what we're in right now in gold, in my mind, a trading range. So you can see how we've come up in previous times to the trend line, boom, 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 and I think what we've got, what is a little boom again. So let's see how that works out, and let's see how the correction, how far the correction goes. But that's how our take on the market, and I think that's how we want to play it. So let's clear the screen and look at this a little bit. I should just look at it a little bit closer, because I think it's important to know one thing we do track here very closely is how these markets close for the week. And if gold closes lower for the week, I think it's probably put in an interim top, probably today's highs, and we'll see what happens. But next market we're looking at is the copper. Now the copper is a totally different picture. We talked about this before, how copper tends to lead economic recoveries, and I think this is no different this time. As you can see, what we have here, we had a signal on the monthly, which came in yesterday at 376. It's 380 right now. Looks really, really good in our opinion. We've cleared all this data, and this to us looks like a very large energy field. An energy field, we refer to an energy field as something like this right here, this big sideways movement. You've gone over the highs right here, and it looks as though this market could go quite a bit higher. I would not be surprised to see it go up to the 410, 420 level, right around these levels, which coincides with the highs right here. So generally speaking, I think this market could and will go higher. Any pullback is going to be met with good support. We have all of our three triangles positive, a plus 100, which is always a good sign if you want to be in a market. So that's what we're looking for right now in copper, is to go higher. Copper reflects global demand, and it would appear if copper is moving to new highs, then global demand is picking up for this metal. So let's clear the screen, go to our next market. So that's something definitely to look at. And the market we're looking at now is the crude oil. Now, crude oil is interesting because we have a plus 90. We have all our triangles in a green mode, indicating strong trend and a strong upside trend. But what we were looking at in this market, we had our monthly come back sometime at 100.59. The market's right around those levels right now, but it hasn't gone anywhere. And this is the interesting thing to look at. So if we take our telestrator and just draw a concept we think is going to happen in this market, is what we see happening is potentially this could be potentially a head and shoulders, and this is definitely the neckline here of this area. And this neckline is at 104, and the market has support around 98. So we're sort of battling between those two levels right now. I think eventually the monthly trade triangle, which is right here, is going to win out and will move over 104. And if that's the case, then we'll be looking at a target zone on crude oil of around $120 a barrel. So it should be a very nice move. We actually, we made some nice moves in this market. We caught some nice trades, and I think we're still looking for the best to come yet in this market. So let's see how that plays out. But generally speaking, the trend is your friend. The trend is up in crude oil, plus 90. It's just waffling around here for the last several days. But let's see how this works out maybe the next week. So let's go to our next market. And that's going to be the dollar index. The dollar index, this is, again, we've been bullish on this market. It's a plus 55, indicating a trading range. We may have to do some more work. But the one thing that stood out to us in this market was this trend line that we drew last night, which we think is very important. You can see we clearly broke through that trend line today, indicating further weakness. And the fact that we closed, or we're below the 80.50 level, was a big number in my mind. That was the low we saw right here on this day that came in around 80.53. So generally speaking, below that looks to be more on the defensive. We may have to do more sideways action. The trend, the major trend, has not changed yet, but it certainly has been blunted. And the 81.50 level that we saw here was pretty much where our target level was. Also, you have the parabolic is now in a negative position. And if we scope this down too, you'll see that the momentum is really whipped out. It's basically very oversold. And then again, you had a little bit of a divergence. Now, a divergence is what the divergence means on the Williams momentum indicator and the price charts is this. And let me just close this, go up here and take the trend line off. But what it means is, quite honestly, what it means is that you're going to see prices moving higher. I'll scope this down so you get this, you'll see the picture. Okay, here we go. So what you do in a situation like this, you have prices actually going up like this. So they're moving higher, and you have momentum going down, not following. It's a divergence, meaning it's internally weakens the market. And of course, today's action going below the trend line is certainly an important one. This is a trend line since November, and I think that's an important trend line to look at. So let's take a look at our next market. Let's clear the screen. And again, we rely on our trade triangles to tell us what to do in these markets. There's no need to guess when you've got really good tools on your hand with the trade triangles and some of the other tools we use. So let's go to our next market. Next market is going to be the euro dollar. Now, as we said last night on the show, we felt this market. I'm going to put a close-only chart on here. And this is how easy it is to use MarketClub. Just click here, boom, you got a close-only chart. We talked about this pivot point right here. We thought a close over the 128.30 level was positive, and of course we did get that, and now a one full handle, one big point over that 129.30. So it looks, for the most part, at least we put in a low, an interim low perhaps, but this market's far from out of the woods yet. So we may have a situation where we just sort of bounce up, go sideways, start going down again, or we may just go sideways for a while. The European debt problem is far more complicated than anyone understands. Certainly it's more complicated than I can understand, but what the market understands is what's the sum total of everyone's thoughts, and that's what's important to you as a trader. Remember, we don't want to fight the market, we want to trade the market. That's the key word. We don't want to fight, we want to trade the market. So let's go to our next market. In the next market, we are looking at CRB Jeffries. We'll be looking at the banks in just a moment, so stay tuned for that. And you can see the CRB Jeffries index has been really going sideways. We were looking at this last night, and Jeremy and myself, we were looking at this, and we thought potentially this could be a head and shoulders reversal coming in. Certainly two things you've got looking at this, and I'll sketch them in real quickly for you. One is you do have a really classic double bottom right here. Now this is a pivot point right here, but we're not over that yet. Now the other thing on a more minor scale is this potential, well, it looks like a happy face, but the reality is this is the key level this market has to go over, 316. If we go over 316, then we're looking at this market getting up to somewhere around the 36, 37 level. I would say somewhere between these levels here as a target zone on the first level, this first move. If we go over the pivot point, of course, we're going from this level here, measuring from this level here, 325 to the lows of 295. So 30 points, we were looking at much higher, somewhere around these levels if we go over, if we hit our first target objective. So let's see how that plays out. I think inflation is going to come back, but I'm going to wait until we have all the signals, all our signals lined up with the monthly, the weekly, and the daily all green, and they're not there yet. But when they are, I want to basically be buying this market because I think it's going to really, really well. Now, you could trade an ETF, but basically futures are probably better to trade on this, where plus 55, minus 55 means a trading range. So wait for the green, and let's go to the bank with that one. So let's clear the screen, go to our next market. And the next market we're looking at is going to be the big mover today, FFIV networks, or F5 networks. The symbol is FFIV. What I want to show you in this market, now look, big move today. We're up over 13, almost 13.5% in the stock today. Huge, huge move. Guess where? We had a signal basically here at 107 that the market was going higher. Now the market jumped around a bit, but this is why we use our weeklies that came in right here at 110. So we weren't surprised the market went up today. We were surprised maybe the size of it, but it really is, that was the key thing. 110.72 was a buy. You can see all our trade triangles are all positive on this market, but the first signal came in at 107.95. So you're not surprised with MarketClub. It tells you when to get in and when to get out. So let's scope this out a little bit further, look at the bigger picture for this market. And what's really interesting to me, again, you have this really big energy field that seems to be stretch on forever. And let me just take all of our triangles off because they've done very, very well. And let's just look at this in terms of a simple line chart. And let's take away the studies, the parabolic. And just looking at this line chart, you see here, this is what I look at, is you've got this really massive energy field down here, like here, here, here. You've broken out, if I just draw this really quickly as best I can, but you've sort of broken out over the highs here. And it would appear as this market can go a lot higher from, I think, the 70 to the highs 115, so about 45. So I think we could go up to about the 160 level as a target zone. So I'd say our target zone on this network is going to be $160 a share, which is a nice move from this level. So there's a big move today, but we caught it already with our trade triangles. And if you're not a member of Market Club, you should seriously think about it because it can make you money. That's what our members say. So let's clear this off the screen and let's go to our next market. And that's going to be the next big mover was a network, Rockwell Collins. And let's look at our trade triangles there. Again, we had a signal on the 10th of January at 57.34, and of course that's also a big mover. Let's put that up on the screen. That's also a big mover today. But again, the monthly trade triangles caught it. These are all the big movers today. We don't decide who the big movers. We actually look at an alternate source for that, and we let them decide. But we can do it ourselves, but it just seems to be better that way. So here we are on the 10th of January, 57.34, be a buyer. And look at today, we're 60. Nice trade. So you've got basically 5% move in just a couple of days in that, and it looks really good. So that's what the trade triangles can do for you. And with a plus 100, it looks like we're going higher. So let's go to our next market. The next market's interesting. It's a well-known market, Johnson Controls, and it's down. Okay, I want to show you this because here we are. The triangles got along at 33.90. The market's 32.70. Should you buy it now? Probably, because the reality is this is an uptrend. I mean, regardless of today's action, this is still an uptrend, and I think you have your weekly and monthly trade triangles in a positive mode. 31.81 on the weekly and 33.90, so you take that, just add those two together, divide, gives you probably about 32.90, whereas we're at 32.70. I think it's not a bad place to get in. You may want to wait until tomorrow, but I like this market. It looks like it's made the turn. Certainly our trade triangles were short from 35.37. They covered that basically at 32.90. Nice little profit, but still you avoided all this pressure and headaches you can go through. And that's the key thing. You want to avoid the markets. And as I said before, don't fight the market, trade the market. That's the mantra, because these aren't buy and hold stocks anymore. It just doesn't work that way. So next market is Morgan Stanley. Now, Morgan Stanley has been under a lot of pressure. It had announced earnings today, surprised some people. It came up. Okay, is it bullish or bearish? Well, the reality is our long-term monthly trade triangle is still negative from 26.70. And we're trading at 18.23. Where would you rather be? This signal came in on April 12th of 2011. So this is not a new thing. And now look, we sat down through all of this. We had a nice big rep. Nothing changed. Nothing changed. Nothing's changed yet in these markets. The banks have not turned around, in our opinion. They're maybe building a base to turn around. And when they do turn around, we'll be right on top of them with our monthly trade triangle. So let's look at our next market. And the next market, of course, B of A. That came out today. The market opened higher. The high today was 729. It's just right down, quite a bit off for the highs, but nonetheless, it's just still not acting well. And that was another signal on the 14th of April at 13.16, and we're approximately half that price now. Where would you rather be? I'd rather be in the direction of the major trend. I want proof. I want proof these markets are going higher, and they haven't proved that yet. I think we may come down again and possibly make another shoulder and go higher and make a reversal. Then I want to be long, but not right now. I think you want to be very careful. And I think that's the last of our markets today. Hey, listen, we've got lots happening, but I want you to become a Market Club star. How you do that? Go to our blog, tell us your story, tell us what you do, how you use Market Club, and all those wonderful tools we have there. Hey, this is Adam Hewison for Market Club. I want you to become a Market Club star. Join us at Market Club. We'd love to have you there. And I'll see you tomorrow, same time, same place, and we'll get some exciting markets lined up for you then. Have a great trading day.